Hey guys, how's it going? Value Venture Investing here today. So, holy man, have we seen a move in Tesla if you haven't seen it already. They reported their Q3 of 2019. Taking a look at the stock right now. Pre-market and after hours, it was up. I was up over $50 a share, but now it closed today almost at $300 per share. Now, this was something that, I wasn't quite expecting. I expected it to be a relatively good quarter. However, it did exceed it in a lot of areas, and there's some areas that are a little bit murkier. So I'm going to talk about this today, and I'm also going to talk to you guys about my opinion on what I'm going to do with the stock, what I'm going to do with my initial position, and what I'm going to do with the position that I added as well. So we're going to go through the presentation they had today because there's a lot of, or yesterday I guess, because there was a lot of interesting things on there. So be sure you stick around for that. But the first thing what we're going to do is we're going to look over at the overview, the big numbers, in case you just want to know those right away here. So the one big miss that people were talking about, well, I guess it's not really a big miss, but if you can see a miss, was the revenue. Came in at $6.3 billion for the quarter. Now estimates were at $6.45 billion. So some of the bears, if you are going to be bearish on this quarter, is there was some revenue recognition, so deferred revenue. Now I see there's a lot of confusion out there regarding this, but so basically what deferred revenue is let's use the example of Tesla, considering we're talking about Tesla, is they have full self-driving capabilities that they're basically charging customers for upfront when they buy the vehicle. However, they haven't delivered it yet. So that revenue goes to Tesla's balance sheet as a liability. It's a liability because they haven't provided it yet and they've received the revenue. However, as they start to deliver that, deliver that product, they're going to recognize that revenue. So there's some people that have said, oh, that's kind of like, it's not really revenue because they've already sold the vehicle. Well, they're just recognizing now. I don't think it's necessarily a bad thing. So there's about 500 and some million, you could look into it, that they recognize. They're going to recognize another 500 million. There's also some foreign exchange in there that they had to gain because they don't actually hedge. And if you don't know what hedging is, it's basically something that's going to level out their earnings, level out their revenue. And it's basically kind of like an insurance policy. You're taking, I'm not going to go into depth on this video. Maybe I'll make a video on it in the future, but you're basically taking out like an insurance policy so that you don't have these wild swings in earnings. So that was the one kind of bad spot. It was down 8% year over year. A lot of things from last quarter were up significantly. They were great, but I like to compare it to the year ago quarter. So we'll get in more into that after, and there's some explanations behind that. I know that the year over year quarter, there was Model 3 come online, a lot of people that were jumping on that. So there's reasons that it was a really great quarter, but a lot of things were down year over year, but it was still a great quarter. Earnings per share. This is what blew people out of the water again. 80 cents is what they had. I think it was around diluted. It was around 78 cents. But expected was a loss of 24 cents per share. So I think that's something that really just drove the stock right there. Net income was 143 million, of course. So we saw a return to profitability. However, year over year that was down 54%. Quarter over quarter, of course, it was significantly up. This was the biggest bright spot. So if you know that, I'm obviously that I'm not the biggest Tesla bull, even though I do have a position. My concern is always going to be, are they going to be able to tap the debt and equity markets? Are they going to go bankrupt? However, that's something that's being alleviated. And again, I think this is something that is a reason why the stock is up so much. Year over year, 80% has gone up. Their cash reserve is $5.3 billion. So that's a significant cushion right there, which is good because in November they have a $566 million debt maturity. Something I always love is free cash flow. Now, free cash flow is essentially the operating cash flow minus the capital expenditures. They usually call it CapEx. So as we know with Tesla, they have a lot of capital expenditures. In this quarter, they had quite a bit as well, for obvious reasons. But they still had a positive cash flow of 371 million. However, year over year, that's down 58% as well. But I mean, this is something that I would come to expect given the fact that Shanghai is coming on, and they spent a lot of money on that. So let's take a look at the presentation right now. I think it's really helpful here to start with the highlights. It has a really good overview here. Some of this is going to be information I already covered, but we'll quickly go through it right here. Cash, they start with cash, obviously. Like I said, I thought that was a determining factor of a lot of people's concern. 383 million increase in our cash and cash equivalents balance to 5.3 billion, 371 million operating cash flow less capex. So again, we covered that. That's pretty great. Profitability, 261 million GAAP operating income, 4.1% operating margin. As I said here, 143 million GAAP income and 342 non-GAAP net income. They talk about a lot of this non-GAAP income. I don't really like that they do that, because a lot of this includes like regulatory credits and stuff like that, or subsidies, stuff. It's like they say that they run the business that way. That's the way they look at it, but those aren't necessarily going to be there forever. So I don't like the kind of like little bit of trickery that we see with GAAP and non-GAAP. People sometimes confuse the two, but if you're ever wondering why we're having non-GAAP, well, they're taking into account basically subsidies from the government and stuff like that. And their gross margin, the automotive one that we're most concerned with, is 22.8%. So that's up quarter over quarter, but down year over year. Operations, Gigafactory Shanghai is ahead of schedule. Trial production started Model Y ahead of schedule. Production expected by summer 2020. So those are two great things right there. I mean, the Gigafactory in Shanghai has been amazing, because it's come up and like from dirt to, being done essentially in less than a year. That's amazing. So they're saying that's ahead of schedule. And then the Model Y, which Elon says that he expects to outsell the S and the X combined, they expected to start production by next summer. Record vehicle production of 96,000 and deliveries of 97,000, and record storage development or deployment of 477 megawatt hours and 48% solar growth quarter over quarter. So that's pretty huge. A lot of people are bullish on that. I don't focus on that too much. A lot of people think that that's going to be a huge part of the business, including Elon in the future. But that was definitely a super bright spot in the quarter. So summary. Last year, our story was about ramping the Model 3. While total volumes are expected to grow by approximately 50% in 2019, this year our focus has been on cost control and preparing for the next phase of growth. That's great. They do need to do that, and they have done that a lot. Despite reductions in the average selling price, ASPs, of Model 3, as global mix stabilized, our gross margins have strengthened. So again, that's quarter over quarter, not necessarily year over year. Additionally, operating expenses are at the lowest level since the Model 3 production started. As a result, we have returned to GAAP profitability in Q3 while generating positive free cash flow. This was possible by removing substantial costs from our business. We have also dramatically improved the pace of execution and capital efficiency of the new product lines. Gigafactory Shanghai was built in 10 months and is ready for production. While it was 60% less expensive to build than our Model 3 production system in the US, continued volume growth and cost control are an important combination for achieving sustained industry-leading profitability. I think that Shanghai is the key to especially driving this revenue number up, and then driving that at the bottom of the line with the lower costs of labor, lower cost of production materials, stuff like that. I think that's the key. That's going to be something that's very bullish for the company. So let's take a quick look at their financial summary here. So automotive revenues were 5.3 billion. Total revenues were, as we said here, 6.3 billion. Again, take a look at total revenues. They were down 8%. Automotive gross profit was 20%, which was actually up quarter over quarter, but down 22% year over year. Automotive gross margin, again, was down 297 basis points year over year. But right now we're sitting at 22.8%. So that's something that is being watched. I mean, if you watch my original video on if I think Tesla stock can go to 4,000, which I indicated that it's not going to, I think if I remember, I put the gross margins, or not the gross margins, the automotive gross margins rather, at that level, or maybe even a little bit higher. So it's interesting to watch those. So looking at net income attributable to common shareholders. So this is GAAP. Again, it was 143 million, but that was down 54% year over year. It was a 311 a year ago, but a lot of people are comparing it to obviously the loss last quarter of 408 million dollars. EPS, this is GAAP again, was 80 cents, but that was again down 56% year over year to a dollar, from $1.82. But again, we had a huge loss last quarter, so that was something really good. Capital expenditures for the quarter were $385 million, so they weren't as much as a year ago, so they're down about 25% from a year ago, but they were up substantially from last quarter. And then operating cash flow less capital expenditures, if you're wondering what that is, that's free cash flow. Again, that's $371 million, but that's down 58% year over year. And it's still down from last quarter as well. Still really good to see that. And again, we talked about cash and cash equivalents. They're up 80% at $5.3 billion. I look at a year ago, they were less than $3 billion. So they give an explanation here for some of the discrepancies in revenue, profitability, and of course they talk about cash. So revenue compared to Q3 of 2018, I compare this quite a bit. The percentage of leased vehicles has tripled alone and has impacted revenue by the majority of the year-over-year decrease. So that is one of the explanations, is that more and more people are actually leasing them. Model 3 mix has increased while we have taken actions leading to the reduction of the ASP of our products. These ASP reductions are particularly impacted by the launch of the standard range trims of Model 3 and pricing actions earlier this year. So that right there is one of the explanations as why we've seen these margins come down. We've seen some things lower year over year. They're introducing new models. So the hope is that maybe they can start generating more higher margins in the Y that comes out, because those are going to probably be really expensive, and of course the pickup truck, although Elon didn't want to talk about that really at all during the conference call, but I think that's going to be a big driver. Continuing on here, we are positioned to accelerate our growth further through Gigafactory Shanghai, Model Y, and also through increased build rates in our existing production lines. These capacity increases will allow for higher total vehicle deliveries and associated revenue. We also expect to gradually release $500 million of accumulated deferred revenue tied to autopilot and full self-driving features. So that, again, that's what I spoke about at the beginning of the video. GAAP automotive gross margins improved by 393 basis points quarter over quarter. So they also talk about they improved even more excluding or less rather, excluding regulatory credits. So that's what I'd want to be looking at there. 366 basis points, but year over year they're down. Margin was impacted in part due to the fundamental improvements in our operating efficiency, including higher fixed cost absorption, reductions in manufacturing material costs, and continued improvements in vehicle quality, and in part due to smart summon-related deferral revenue recognition. Again, that's what we spoke about before. Foreign exchange, what we spoke about before, and other non-recurring items. Improved gross profit combined with a decline in operating expenses resulted in material improvement to GAAP income. So they talk about some of their cost efficiencies. As they ramp up production, like from suppliers, they're going to be able to get a lower price, right? Because they're buying in higher volume. So that's what they're talking about. They're also talking, he talked a lot about the fact that they're really learning from what they're doing and that they're becoming more efficient. Like you'll see some of the pictures at the end. It looks, rather than producing Model 3s in a tent, they're Shanghai looks amazing. It's they're really ramping down on costs and they're increasing their efficiency in terms of production. Cash, I'm not going to talk about this, but I'll put it up on the screen here because we've talked about a lot. Amazing 5.3 billion, and also the positive free cash flow there. Taking a look at their operational summary, the Model S and X were down 39% year over year, and they were down over a quarter, or they're actually up, sorry, quarter over quarter. But we're gonna, we expect that they're going to be down year over year because there's going to be some cannibalization with the Model 3, and I think this is to be expected, and this is not really anything that anybody focuses on. The next one that people focus on, of course, is the Model 3 production, which is up 50% year over year. So that's the big one. Q3 it was almost 80,000, right? And that was up significantly from last quarter as well. They also give the deliveries. We won't go into those too much. Also, the solar, I don't focus on this too much, but the solar deployed in megawatt hours was up 100%. That's crazy. So that's something to keep in mind, keep an eye on. I'm not super interested in that right now until it becomes more material, but still very good. And this is maybe something else that people don't talk about a lot, is that this is the competitive advantage of Tesla. I mean, if I were to buy a vehicle, an electric vehicle, I would be very concerned about range. I'd be very concerned about charging in certain areas. And where I live, there's even a supercharger. So we've seen supercharger locations increase by 22% year over year and quarter over quarter, 4% growth. So that's a competitive advantage that they need to really start, continue to focus on. It's good to see it increasing. I know I've spoken about it on my other videos before, but that's going to be a moat, if you will, for other competitors getting in. Here they give a little bit of overview about the vehicle capacity. I'll leave it up on the screen if you want to read it. It is interesting to look at for sure. It shows the capacities on the right here, the installed annual capacity and the current, the status of each one. Notable here for me was Europe. It says we are in the final stages of our site selection process. I know that Elon's talked about this recently. Our European Gigafactory is expected to produce both Model 3 and Model Y. I also believe that they're going to be producing the truck there. I could be wrong on that, but that's something to keep an eye on. And as always, they talk about their technology. They talk about autopilot and full self-driving and the vehicle software, which is again another moat and huge competitive advantage for them. But I really like how they always talk about the powertrain and they compare it to other vehicles. It says under here, Powertrain. In addition to launching longer range versions of the Model S and Model X in April, we've been able to increase the EPA range of the Model 3 Standard Range Plus by 240 to 250 miles. That's awesome. We accomplished these improvements by more efficient energy use rather than a costly increase to the battery size. So that's just becoming more efficient. Amazing. Our current shortest range vehicle is on parity with the longest range production EVs offered by other companies. Long range models of each Model S, X, and 3 continue to have 20 to 40% higher range than that of any other EV available. So you can see in the chart here, we got the S, the X, the 3, the S from 2012, and we've seen the the Hyundai Kona, I believe it's called, the Bolt that's not even out yet or coming close, but even the Porsche is not even really coming close to Tesla, so that's a huge thing as well. The only other negative I could see on the quarter is the outlook. Of course, guidance is very important. They say under vehicle deliveries should increase sequentially and annually with some expected fluctuations. Of course, yes, we are highly confident in exceeding 360,000 deliveries this year. Great, although they were saying 360,000 to 400,000 before, so it seems like that's come down a little bit. Cash flow, this is amazing to me. I really like this as well. Positive quarterly free cash flow going forward. They're saying it's going to be positive, of course, with temporary exceptions. Profitability, again, they expect positive GAAP. Of course, I want to see GAAP net income going forward, again, with possible temporary exceptions. Well, they've kind of said this before, so I hope that this is something that continues, although we've seen that they have been profitable several quarters in the past year now. So I'll show you a chart on that shortly, but that's something I'm going to be watching very closely, and you can bet that that's something that the market's going to be watching very closely as well. Product trial production of the Model 3 in Shanghai has begun ahead of schedule. We're also ahead of schedule to produce Model Y and now expect to launch by the summer of 2020, so that's ahead of time. That's another reason I think that the stock is up quite a bit. We are planning to produce limited volumes of Tesla Semi in 2020 and hoping to announce soon the location of our European Gigafactory for production in 2021. Now, that's not very far away in the future. I'm also looking forward to the Semi as well. These are some key metrics that they've represented in charts here. Again, vehicle deliveries, this is the one that people have been focusing on more. Again, Q3 2019 all-time records, looking very good there. Operating cash flow less capex, of course, that's free cash flow. They don't like to call it free cash flow for some reason, but you know, look at the last quarters that we've seen it a couple times. Great to see. And of course, net income, we've seen 3 positive times in the, you know, since 2016, so that's great as well. And at the end of the presentation here, they give some pictures, and these actually, I think this presentation was really well done. It was better than I see from a lot of other companies. So here is the stamp and press. Everything looks so efficient, you know, looks like they're, you know, it doesn't look like they're building out of tents or anything like that. Amazing. Some other photos here of the robots working on the cars. And it just looks so professional, so efficient, and you can just imagine this thing pumping out 1,000 per week looking at these pictures here. Also at the very end here, we have a picture of the workers working on a Model 3. And if you've been watching anything on YouTube here, this is the exterior of the facility that just basically popped up to nowhere. It's huge, right? And then again, like I said, in 10 months here, you look at it from January 2019, there was essentially nothing there. In October 2019, it's being built, and wow, just incredible progress. So overall, like it was an amazing quarter, absolutely. I do think though, personally, if I'm gonna be, you know, the devil's advocate here, it was a little bit overblown in terms of the stock reaction, because I think a lot of bulls expected this anyway. We expected production to ramp, stuff like that. The profit, you know, the quarterly profit was a surprise for sure, but it, you know, in my opinion, maybe it came up a little bit too much. So that's the reason that I might exit my additional position. I usually wouldn't, but I'm up like over 50%. I bought in at 180. I haven't sold yet. I think I'm going to sell about 310, 320, because if it hits those levels, I think it might fall back. And man never went broke taking a profit, and that's how I make exceptional returns over time, right? My initial position that I'm down on, that I bought on the 420 tweet, I'm gonna hold that for sure. So I'm still gonna be in Tesla. It's not like I'm selling it. It's a very small position that I added at 180. So I'm gonna keep that and go from there. And it'll be interesting to see how the stock responds in the next couple of days. So yeah, tell me what you think about this. I'm really kind of curious because perhaps I missed something on a lot of the year-over-year numbers that came down, and maybe I'm missing something in terms of thinking it was a little bit overblown. It was a great quarter, of course, but Q3 last year was a great quarter as well. So we've seen this violent up reaction in the stock. I'm wondering if you guys agree with that or whatever you think. So don't forget to like, subscribe, guys. Really helps the channel, growing the channel, and helping, you know, sharing this video if you can. That'd be great. So that's gonna be it for today, guys, and I'll see you in the next one.